Welcome to the special presentation this week titled, Let the Trend Be Your Friend, Emulate the Winners. My name is Todd Schaefer, Manager of Research for VectorVest, and I'll be your presenter this evening. I have a problem. I need to develop a contest entry for the upcoming All-Subscriber Portfolio Challenge. You may find yourself facing the same challenge. Dr. DeLito set up my presentation for this week in his essay from last week. Let's take a look. In the program, we'll go to the Views tab. I set my date back to last Friday's date for the views, and if I scroll down, we find the section I'm interested in, The Way of the Winner. I used the phrase, luck is the residue of hard work, in my essay of June 8, 2018, which was entitled, Learn from the Leaders. It was aimed to encourage subscribers to learn from the best performing portfolios that were in the recent user group leader competition. You may recall that Pensacola won that competition by a wide margin. Was the Pensacola user group lucky? If not, how did they come up with such a great trading system? I wanted to know as much as anybody, so I was delighted to watch the excellent presentation given by the Pensacola user group leader, Mr. George Clark, at the International Online User Group Forum on July 7, 2018. Mr. Clark described how they got organized and went to work. I was quite impressed by the thoughtful, systematic approach they used in developing their trading plan. There's a lot in that presentation we can all learn from. We're very fortunate to have a recording of Mr. Clark's presentation, and I think of it as the way of the winner. And of course, if you go to the live views, you can click that link and see that recorded webinar. I think of learning from the leaders as just another variation on the theme of let the trend be your friend. Find what's currently working and emulate it. I also know from my experience as a coach that a lot of our subscribers aren't inclined to do the hard work, or maybe don't have the time to do a lot of hard work. So weaving all these threads together, I thought this week I want to try to create a winning trading plan the easy way. Let's start with a little bit of background. I'm going to click on the Unisearch tab. In the old days of VectorVest, we used to use quick tests to identify the best performing searches over the previous day and let them lead us to the best performing stocks. We traded those stocks in our Riding the Wave model portfolio. Nowadays, we use the power of the VectorVest Derby tool to identify those best performers automatically. And using the tote board, we can analyze that performance over time. For more on those tools, I would refer you to Steve Chappell's excellent presentation, How to Find the Best Searches, from June 15th. Of course, the best part is that all VectorVest subscribers, whether you have the Derby tool or not, have access to this information every night in the VectorVest Views, where we publish the top performing Derby strategies on both a 1-day and a 5-day basis. Of course, the 5-day winners have been performing with consistency over the last 5 days. You'll often hear us refer to easy rider traders who like to see a 5-day winner that's still continuing to perform today. But if I want a quick, reliable way to identify the currently best performing searches, and I do, this is a great place to start. And so tonight, I'll demonstrate how I'll use this information to create a winning trading plan the easy way. So I'm going to begin with the 5-day winners from last night, and I'll analyze their performance. My tool of choice will be the backtester. But the first choice I'll need to make is over what time frame do I want to test. So let's move to a market timing graph. The 5-day Derby winners, of course, are performing well on the hard right edge of our graph over the previous 5-day period. But just looking at this graph over the past 1-year time frame, I noticed that the market had steadily improved with low volatility into our market high that we established here on January 29th. After the correction, the price action is much more volatile and has trended less well. So, would I like to test the performance since coming off of the correction? Would I like to test the whole year? Well, it depends on what I'm trying to find out. If I expect the market to continue to perform in this manner, I might test just from the low forward. Or if I want to be more universally ready for anything that comes at me, I might test the whole time frame. I'll choose the whole 1 year time frame because it's easier, but it can also demonstrate the difference in the performance of the searches by using both market conditions. So returning to the views, I see my first candidate is MACD and Stochastics Killer Crossover. This search requires that you have the ProTrader module installed on your program. If you don't, just move on to the next one, bottoms up. We'll go to the backtester. We'll create a new backtest, and let's call it bottoms up. For my account settings, the contest says I need to trade a 50,000 unit portfolio, no commissions. And so we're going to execute it the next day's open on daily pricing mode. So the portfolio is now set up. Now let's build a custom trading system. I'm going to start with the primary wave as my timing system. Normally I would test the native performance of the search using all the market timing signals to find the best native performance. But for brevity, I'll test only the primary wave. I also like the idea that it's the fastest timing signal and will be most responsive to changes in market direction. Consider I have no idea what the condition of the market will be during the contest period. So let's fill out the rest of the details of our trading system. For our up situation, we're going to buy long with bottoms up. Let's just sort alphabetically, and I'll scroll down to the B's. Scrolling further, I'll come to bottoms up. For my stop criteria, I'll use none because I want the native performance. For more settings, I'll just leave all of my defaults. For your reference, I'll let you see the screenshots here. For the down situation, I'm simply going to go to cash. Let's click Finish and let it run. By default, the test period will be over a 1 year time frame. And let's take a look at our results. I'll clean up our graph a little bit so we can maximize its size. In reviewing our results, we see we started 1 year ago. We've had 50% winners, a 77.5% gain, paid no commission of course, and we had a maximum drawdown of 11.5%. Looking at the equity curve, really underperformed in 2017. Performance though spiked handsomely into 2018, and so this search did much better in the volatility that we've experienced so far in 2018. But of course that's only my first test, so I return to the views. I pick my next search, my next bullish search in this case, and run it. And I would repeat that process over the prior days of the week. Just looking at my bullish winners at this point, I'll look at the bearish searches as the second phase of my testing. So I've run all of those tests, and here are my results. And we see over this week, we've had 10 distinct searches identified by the Derby tool. Bottoms up was our top performer, and we noted its performance has been best in 2018. So to compare and contrast, let's look at Jubilee. While it did have lower gains overall, it had much better performance in the run-up during 2017. And so our first decision point is one of strategery. Would you prefer to have a more balanced approach that might do well in any market condition coming forward? Or would you like to amp it up with high test gasoline and trade a system that's doing well right now? If you look a little deeper, you can also see the bottoms up pulled back in the fall of 2017, but since then has continued to move higher in this past year. These horizontal lines are where the portfolio was in cash because the primary wave was down, But with each successive turn, we tended to hit higher highs, and we're still pulling even into the current market. My next task then is to optimize the performance of this search over the past year, systematically stepping through the variables of the backtesting tool to optimize that performance. For me, that next stop is our stop loss combination. So I'm going to strike a copy of the backtest. I'm going to change my name to include the stop loss I'm going to incorporate. So coming down to the customization button, I'll go back into the rules for the up situation and activate the stop criteria tab. Now there are a wide selection of stop criteria available, and I was supposed to be keeping this easy, right? So I have some go-to touches. The first will be to just run the rec equals sell stop loss. A wide stop loss lets the price action fully express itself, lets my winners run, but stops any big losses from accruing as a stock turns into downtrend. I'm going to leave all my other settings the same, just click finish and finish and run. By the way, it's helpful at this point to start to group your results by their up search. If I minimize my graph, you can see now that I have all of the bottoms up runs will be grouped together. Looking at my results, and include the equity curve of the backtest with that result, I underperformed my benchmark quite handily. I did improve my drawdown, but I suspect this may not be my best solution. Now, as I indicated, I could test every stop loss setting in the tool, but I want to keep this easy. So here's what I like to do. I start with a trailing stop. So after I've run the recommendation equals sell, I'll copy that again, and I'll start by default with a trailing stop of 10%. I come back in to customize my settings. Trailing stop is near the bottom of the list. It comes up by default at 10%. I click finish and rerun the test. I'm going to repeat that process with a trailing 15% and a trailing 20% stop loss to see which performs the best. And what I'm doing now with the trailing stop is I'm setting the floor to find that threshold of the best latitude I need to give the price action as the trailing stop follows price action higher. Let's take a look at the results. The top performing stop loss was our trailing 20, where we had 49% winners, a 100% gain, with a 10.4% drawdown. Very close to our trailing 15 stop loss, which had a 50% winning trade percentage, 99% overall gain, with a 10.6% drawdown. So very close performance in these two. With that performance so very close, and the equity curves very similar, I'm going to favor the tighter stop, which limits my risk, and in the contest environment, I hope will give me the advantage. I'm going to use this information to help me with my favorite stop loss tool, the Profit Locker. I'll use the trailing 15 as my threshold for the Profit Locker analysis. So let's strike a copy. We'll customize our trading plan, go to the stop criteria, and activate the Profit Locker stop. By default, it starts with a 50-15. So that 15% trailing stop threshold copied here in the Profit Locker, I'll click Finish. Let's change our name to reflect the Profit Locker stop. And I'll click Finish and Run. And now I'll test not only the 50-15, but a range of stops. So I'll let all that work finish, and then I'll show you the results. Here are my test runs, and let me discuss a little bit what I did. You can see I ran a series of stop losses then on the Profit Locker from a combination of 30-15 up to 60-15. Of course, there are combinations beyond these that might even outperform what I've tested, but I like the 30-15 range as my bottom threshold because I have a 50% winning trade percentage. That 2-to-1 relationship is a good risk to reward relationship. Let's resort our results by percentage gain loss. My best performance was in the trailing 20% stop loss with 100.6%. But for a slightly reduced performance, a trailing 15% stop gave me a slightly better winning trade percentage and gave me much tighter reins on the performance of the portfolio moving forward. Of course, these trailing stops let our winners run. Using the Profit Locker, I'm adjusting that trailing stop to its tightest when I reach my profit objective of 30%, and that slightly improved my performance on both an overall gain, on a percentage winners, and on a max drawdown. Finally, let's take a look at our equity curve. And while we still perform best in the 2018 time frame, we're continuing to hit a series of higher highs as this portfolio continues to find winners. So I have several good contenders in my results. My choice will also be impacted by my decision of what I want to do on the down signals. Do I want to go to cash? Do I want to go short? Or do I want to just hedge my long positions with short positions? My next steps, if I choose, I can further refine this trading system. There will be a systematic routine of copying the backtest, going into the customization of the trading plan, and change my variables, maybe a 5-stock portfolio or a 20-stock portfolio. Automatically replace or not. Step in or jump in. Hold through the down signals or go back to cash. Limit the ability to repurchase stocks that we've traded. And enforce diversification for both industries and sectors, as well as the maximum percent of the stock's average volume. At each step in the process, if the results get better, keep it. If they don't, throw it out and move on to the next parameter. If I want to trade to the downside of the market trend, then I repeat the process using the top 5-day bearish strategies from the Derby results. Once you're satisfied with your results, simply transpose your backtest settings into your contest portfolio. So that's what I call creating a winning trading plan the easy way. It took a little bit of work, but most things of any lasting value do. But with just a little bit of work, you can let the trend be your friend and find what's currently working in the market and emulate it. And, oh, by the way, this also works for your real trading portfolio too. Thanks for watching.